Comments made on the following paid commercial program are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time.
Welcome to the Money and Wealth Show. On the program this week, tax tips with David Ingram, money commercials, and with some strategies to save you tax dollars before the end of this calendar year, our special guest is Adrian Mastracci. Welcome to the Money and Wealth Show. I'm Sterling Fox. It is Saturday, November 20th, leaving us about 10 or so days in the month of November, which is a good time to consider planning the year end to our advantage. Save a few tax dollars and maybe get our financial house in order along the way. To help us through the process, it's a real pleasure to welcome back Adrian Mastracci to the program. Mr. Mastracci is a financial advisor and portfolio manager and president of KCM Wealth in Vancouver. Good to see you again.
Well, thank you.
Here we are with 11 days left in the month of November. And time to get our financial house in order. And is there really enough time to actually, if we pay attention to what this list of items involves, we can save some serious tax dollars to our advantage here?
We can, and I think there is enough time to do it between now and the end of December. My suggestion would be to get it done, say, by the middle of December, just to be on the safer side. But there is enough time.
Okay, and it's important to note there are 12 items that Adrian and I are going to go through for you. This can be had in the form of a newsletter, and we'll give you Adrian's email address, and you can request a copy of this to have personally. But number one on this December dozen list, Adrian, is a relatively new innovation in Canadian tax law. It's the tax-free savings account, a reality in our country for just a year or more. Tell us about the TFSA and how to organize ourselves for 2010 to save a few dollars.
Well, if you haven't done one yet, the first thing to do is to open one up at just about many institutions out there. You can put in up to $5,000 per year for 2009 and then 2010. So your maximum deposit this year should be no more than $10,000.
Right.
And the key to the TFSA is that the income that you earn in the account is tax-free when you pull out the money.
Now, there are a lot of ads on television and in the newspapers. Come to our place and let us set you up with a TFSA. But strangely, I suppose maybe not strangely, we're a pretty conservative crowd, we Canadians. Most Canadians are actually using a tax-free savings account to save. And professionals like you say, well, okay if you must, but really there's a lot more that can be done inside a $5,000 tax-free savings account.
Well, that's right. Some people will need it for an emergency fund, let's say. Others will use it to invest as part of their overall game plan. But either way, whichever one is the one for you, just make sure that you're following the investments that are for you. And ultimately, as I mentioned before, you do want to pull out some money and have it be tax-free.
Now, in order to qualify for some advantages, $5,000 worth perhaps if we have that amount to put in the account, is there a deadline attached to opening up a TFSA?
It's like the RRSP. If you don't use it, it gets carried forward. So if you haven't done 2009, your carry forward room for this year is at least $5,000. Plus, if you have not done 2010 yet, you can put in up to $10,000. And in just a few short days, you can put in another $5,000 for 2011. So within a short period of time, you've got up to $15,000 that you can put in. But right now, it's only $10,000 maximum.
Okay, now, RRSPs are second on your list of 12 items to check as we approach the end of November. First of all, what's the big difference to the individual between a tax-free savings account, Adrian, and an RRSP?
Well, the tax-free savings account simply lets you pull money out tax-free. So, and there is no deduction when you put the money in a TFSA. Now, unlike the RRSP, when you put money into the RRSP, you get a deduction for tax purposes.
Right.
And when you pull the money out, it's taxable. So those are the big differences between those two accounts.
Now, is there a deadline associated with the RRSP in terms of, here we are again, November 20th. We've got till the end of the calendar year to do something with our RRSP, or does it go beyond? Is there a deadline?
The deadline for the RRSP is February 2011. So you can make your deposit.
The pressure's off.
Pressure's off.
Okay.
You can make your debt. You make your deposit anytime between now and the end of February. There is no real reason to wait to February if you have the money. So if you've got the money now, make a contribution to your account, to a spousal account, or both, depending on your situation, but simply get it done.
Okay, and that goes pretty much for all of these 12 items on this December organizational list that you've got. Some have specific deadlines, but ideally the point is to get yourself in better financial health by the end of the calendar year, right?
Well, that's right. Look at your situation and ask yourself, what fits you? What should you be doing? Is it the TFSA that's first? Is it an RSP that's first for you? Is it other things we're going to discuss? Just make sure that whatever you do is really for you.
Just before we move on to item number 3, back to the difference between a tax-free savings account and the RRSP. Is it more advisable for a younger person to look at the RRSP first, or should they look at the tax-free savings account first?
If we make the assumption that you want the TFSA for emergency purposes,
The rainy day fund.
the rainy day fund, just in
Okay.
case something goes haywire that you're not expecting, then the TFSA probably fits you best. Or if you're in the low tax bracket now or no tax bracket at all, then obviously the TFSA would be the first thing to do. You can always leave the RRSP room to accumulate, and let's say 5 or 10 years down the road when you're in a higher tax bracket, then you can make the RRSP contribution back to whenever you had room but didn't make it.
All right, now item number 3 on our list deals with RRSPs, except the word conversion is added to this item. Explain, please.
For those people that turn 71, the young 71, this year, sometime in 2010, you must convert the RRSP.
That's the law, right?
That's the law.
Okay.
So you must convert the RRSP by the end of December 31st. The obvious choice that most people pick is the Registered Retirement Income Fund, which everybody calls the RIF.
Right.
So that's the deadline that you have to look at. So if you're 71 this year, you must convert to something like a RIF by the end of December. So the setup must be done, and the money has to be put into the RIF, and the first payment that comes out of that RIF will be next year, but you have to do it this year.
Is there a fine, a penalty of some kind if you turn 71 in 2010 and just don't get the job done by the end of the calendar year? Will the feds get on your case?
It's rather ugly. Everything that's in your RRSP becomes taxable income in this year, so it's not a good thing to miss.
Get that RIF conversion done by the end of this calendar year. We're talking about organizing ourselves effectively and to our tax advantage for the end of 2010. Our special guest this week is Adrian Mastracci, and we have lots more ahead. Please stay with us.
Hi, I'm Larry Ray, President and CEO of American Manganese, Inc. Our project in Arizona is electrolytic manganese. We have a resource of 11 billion pounds, currently trading at $1.40 a pound. Our cost, 44 cents. For more information, go to our site at americanmanganeseinc.com or phone me direct at 604-531-9639.